following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Excuse me. Welcome to the March 3rd, the terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 1 o'clock in the afternoon. I do want you to know I'm absolutely grateful for your presence here. But more important than that, and that's this, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. Go ahead and send me an email. Send it to Steve at TFNN.com. Send it early, please. And in that subject heading, if you'll be kind enough to put radio show question. Of course, in our Tigers Den, well, any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to last show. We got a mixed bag out here. What I mean by that is you've got the Dow trading up 55 points and the Dow Transport's up 137. The other indices are trading lower. Now the S&P is flat. It's off 1 point. The NASDAQ 100 is not flat. Down 85 points or 0.6. The Russell's off 0.9, 18 points out there. If we take a look at Goldilocks, up $12, trading out at 19.34. Silver is basically flat at 25.17. Light sweet crude off 76 cents, trading down at 109.75. Natural gas off 3 pennies, 4.73 is its print. And the 30-year Treasury printing out at 156 and 22.30. That is up 6 ticks. So where do we lead the charge, by the way, dollar-wise, the upside? You've got Union Pacific, a little over 4% or $11. Equinix, $11, 1.5%. Best Buy, big moves in Best Buy lately, I believe, up $9, 9%. Dollar Tree up $8, 6%. O'Reilly Automotive, $8, 7.60, really a little over 1%. Down $53, 14%. Now that's taken in the shorts, but taking it in the shorts even further is Snowflake and Viva Systems. They're both down 17%. That's $47 and $40 respectively. Amazon's off a little over 1%. That's $36, and Booking Holdings down 29, a little over 1% there. So plenty to look at. Of course, I want to look at what you want to look at. We do have a couple of questions that are in. Let's just first take a quick peek here at what's going on. So one of the things that I mentioned during the 1 o'clock update, I just kind of peeked in and looked at it. If you take a look at since the lows out here, February 24th, each successive day has a higher low, including today. And now the today it's not traded above yesterday's high, but at least it's taken it out. In fact, each of the equity futures contracts are trading below yesterday's high, but they have actually taken them out. Not so on the bottom. So that's just a slight little subtle bullish type message out here. In the case of the ES Mini, price is trading above its oscillator and change line. It's above the center of its daily profile. It's in the resistance zone because it's a bearish structured profile, but that would at least suggest making a move towards that descending trend line. Doesn't have to do it today, doesn't have to do it tomorrow, doesn't have to stop there if it does move higher. Where it should stop, though, would be about the 44.84 level. That is the top of the daily profile. Now, we probably get a decent indication as to whether that's going to happen, because what would really be required here is the NQ, assuming that these are going to all move in lockstep here. The NQ is dealing with the resistance of both the bottom of its daily profile as well as its descending trend line. Now, we've basically been moving sideways here. So moving sideways and taking out a trend line like the Russell 2000, if you look at your chart on the very right-hand chart out there, that doesn't really, to me, that doesn't mean a whole lot of anything. You know, do you take it out? or moving sideways, says, we just go on to the next element out here. So in the case of the ES Mini, looks like it should want to move higher out here, but the problem may really be coming from that NQ. If we take a look at the Dow is sitting right where buyers and sellers believe there's fair value with inside its daily profile. That's between the range of 32,745 up to 35,060. The center is at 33,902. It's printing out at 33,906. So it's really sitting, it's a neutral signal for both you and I. But if you did get a close above the 33,902 level, it would be an indication that it too wants to move higher. It's dealing with the NASDAQ out there. Now, the move in the case of the Dow would be a larger move percentage-wise than the others, because its descending trend line on top of its profile is up in that 35,060 level. Lastly, take a look at the Russell 2000. What it's really dealing with at this stage here is its swing point from the trading session of February 10th. It is trading inside it right now, and if it does close today above 2034.30, we're 2037.70 right now, that would give us indication that it might want to go try to tag the high of that February 10th level. That's up at the 2103 area. So that's kind of the overview of what's going on in the equity markets. If we switch from this panel here and go take a look at a 30-minute chart just to give you some intraday feel for what is taking place out here, you can see that the 30-minute chart for the ES, the NQ, and the Dow equity future contract each confirmed Rhodes momentum indicator tops earlier this morning. That sent price lower. In the case of the ES Mini, it got below the breakout level at 43.70. I don't have a reason why it stopped where it did at the 43.40 level. Nothing that shows up on my screen. The same really with the NQ. Now, the NQ did not make it down to the breakout area. The breakout area would have been 13,951. Right now, the NQ is dealing with resistance. So probably just like we were talking about the NQ earlier, if the NQ can close above, this is a bearish structured 30-minute profile. So that would say if a price could close above 14,175.45 out there, that would signal a move at least back to this morning's highs out there and perhaps higher. In the case of the Dow, it too had a Rhodes momentum indicator signal. I'm not sure why price stopped where it did, but price is very likely going to go target the 34,143 level. It's inside a bullish structured profile on a 30-minute basis. You're above both the green oscillator and change line. You're above the center of that profile. And that typically would say you want to go test the high. So expect and anticipate that the Dow will get back to the 34,143 level. The Russell 2000, it's dealing with its red oscillator and change line, so its mind is not made up whether it wants to join that fight. If it does, then its next battleground, other than the oscillator and change line, which is dealing with right now at the 2040 area, would be up at 2050. Closes above 2050, that's the top of the current profile. Then it gets you back to the highs of the morning. So that's what's going on in the short-term time frame charts, as well as what was going on the daily. So let's get to a couple of our questions out here, just simply so that we don't get behind on anything. Of course, folks, I would love to hear from you. I'd love to see this, either the phone lines lit up or certainly the email lines lit up as well. So we've got three questions, one from Mike, Nicholas, and Alex. So Mike writes in, and he says, I think this might have been from yesterday. Yeah, okay. So I was looking at yesterday's message where we were looking. What Mike is looking at is to trade drip and is looking for a short-term trade. And actually, today's message was perhaps the buy-in drip was yesterday. Again, thinking short-term trade. So let's try to help Mike out with regard to drip, which really means we're going to take a look at the XOP on a short-term time frame to see if we can find any kind of signals or trade setups that would assist Mike. Steve Rhodes with TFNN. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're taking a look at the XOP. This is the S&P Oil and Gas Exploration ETF out here, which is the and what Mike wants to trade is DRIP, and DRIP is the inverse. So what Mike's looking for is looking for the XOP to move to the downside. So what we have up on our screen right now are 3 time frames, and those 3 time frames each show confirmed A to B equals CD up patterns. So let's start with the monthly on the very right-hand panel. The monthly chart says that over time, and what you can also see here is prices closed above its bearish structured monthly profile. That is a bullish development out there, and it's been above it for the last now 3 months. This has a 1-to-1 A to B equals CD pattern that suggests its price target would be 142.20. I would hearken to say more likely it's 161.44. And the reasons are, 1, price is trading now along the left side of that C to D leg. That tells you it's a stronger move than A to B, at least at this stage of the game. The retracement on the B to C leg was only 41%. So that talks about a very strong A to B equals CD pattern that should form. And that would say that this would do more than a 1-to-1 level out there. Now, that's the bigger picture. Let's go to an intermediate term time frame picture. And as we speak right now, you've got volume of, what do you have volume of this week? You are at, where are we? 63 million shares. The swing point that is taking out only has volume of 32 million shares. That was the week of November 8th out there. So now the weekly is giving you, so weekly's got a 61.8% retracement, B to C leg. So that would suggest, and you can see the price on the right-hand side. So from a weekly standpoint or intermediate term time frame, it still wants to go target that 129.39 level out there. And maybe it goes further, but that would be the initial, that's what I would say would be the likely target for it. Now, on a daily time frame, Mike, you've got a confirmed A to B equals C to the upside. Price has already gotten above the 1-to-1 level. And until you get a bearish reversal candle, which we don't have as we speak right now, this would suggest that price wants to make the next level move. That next level is 126.56. Now, what Mike is interested in is a short-term time frame, but the short-term that he's looking for is to go against the grain out here, against the trend of these confirmed A to B equals CD patterns out there. So let's go switch over to our next set of panels. Let's go to an 8th set of panel, slightly different than what you and I normally look at, because here we're just going to start with the daily in the upper left, and then a series of intraday charts out here. So now, what else do we know? Look, on the daily time frame, you're above that green oscillator and change line as well. That's a bullish outcome. So it's your 5-hour time frame chart here, Mike, the 300-minute chart. I'll expand it out. It does have a TD9 count top. Now, when you get a topping pattern, topping signal out here, such as the TD9 count, this would suggest that price would pull back to its first level of support. In this case here, it's the oscillator and change line. And that's at the 117.28 level. So the 5-hour time frame chart says, yeah, I'm going to take a little bit of a timeout. But at this stage here, that's all that it might be. It's not a guarantee that price gets back to that oscillator and change line. It's just the likely level of where it would get back to. Let's go see if that's supported by other intraday charts out here. Well, although I don't have a topping pattern on the 120-minute time frame chart, out here, price has pulled back and has tested and rejected that oscillator and change line. That's green. So that says for the 2-hour time frame chart, this still remains bullish. What would turn it to bearish, or bearish when I mean bearish, I don't mean bearish, I mean bearish directionally speaking, and a move lower, would have to be a close below 117.81. The 60-minute time frame chart does have a Rhodes momentum indicator signal, and price is below the current profile level. So that would say that price could pull back to 108.48. I am not saying that's what it's going to do. I would only say that or suggest that if, in fact, you saw a close below that 117 area. That would be the green oscillator and change line on the 5-hour chart. That's the bottom of the current profile on the 2-hour chart. And then it's free, the 60-minute that is, to run back to its breakout level of 108.48. The 30-minute chart, it has a Rhodes momentum indicator top. It has not broken through support. That level of support is 118.95 out there. 15-minute, it has a TD9 count pattern. I don't have much more there to add. Nothing really on a 10-minute and nothing much on a 5-minute. So you're looking for some type of intraday signals out here. What I'd hoped that would pop out here for us, Mike, is one of the short term, and I mean like 10, 15-minute chart out here that would show up with some great signals to say, hey, this is what you should use as a guideline to make that trade. So look, you're going against the grain. You got to remember back the monthly, the weekly, and the daily out there. And oh, by the way, to the extent that it matters what oil is doing out here, if we switch over to, well, we're going to have to switch back to the black background chart because I don't have that ready. Actually, let's do this here. Let me take a, let's see if we can get this to work for us. So CL0422, and let's get these intraday charts populated with regard to light sweet crude as well. I don't think it's a 100% directional correlation between the two, but let's just take a look at them to understand what light sweet crude is communicating to us for the daily and these intraday time periods. Now, it's just the 5-hour right now that's taking its time to update. So there we go. Should be in good shape right now. So with regard to light sweet crude, now today is going to form bar number 8 of a TD9 count. We know this is on the daily time frame, the upper left-hand chart. I'm not showing it. Oh, son of a gun. Sorry about that. You must be looking at my face. Ugly mug. Nobody wants to do that. So now let's get back to the actual charts. There we go. Now that's a prettier picture. So you can see bar number 8 is going to form today. And we know that on a TD9 count top or bottom, that first the high in the top's got to be bars 8, 9, or bar following 9. So all that needs to happen tomorrow for a TD9 count to confirm is a close above bar number 5. Bar number 5's close that I have it at is at 95.82. So it's likely to occur that we have a TD9 count top that will form tomorrow. Now, it can be the high of tomorrow. It can be the high of Monday out there with regard to light sweet crude. But we want to watch that pattern unfold. With regard to its 5-hour time frame chart, I don't have a topping signal here. Now, there's probably an A to B equals CD, so I can't take that back. Let me just expand this out. And sure, there's an A to B equals CD pattern. And that was generated or sell the D point. That was confirmed this morning as we came into that 9 o'clock session because that bear sash candle. It is below its oscillator and change line. So light sweet crude, based upon the 5-hour chart, could target 104.49, 99.68, even 95.32. Now, if that's going to unfold, we should see some key levels of support being broken on the intraday charts. Well, on the 120-minute chart, you have a Rhodes momentum indicator signal. Price is below the profiles there. The 60-minute chart, price pulled back to 108.23. It was just one bar underneath it. That was its breakout level. So that's probably a really good area to watch, 108.23. 107.81 is also, you had a TD9 count on the 30-minute chart. Price pulls back, tests, and rejects that breakout level. So the real key, I would say, looking at these charts here for its intraday time frames, knowing that you've got that TD9 count, to be watching for a suggested move lower. Let's make it the 107.81 and 2 consecutive bars below that. That is a 30-minute time frame breakout level. So, you say maybe you should have taken that trade. Maybe so. I don't see the corresponding patterns to really go with that thought process. But that doesn't mean I'm right and that you're wrong. That is not what I'm saying. You're just asking me to review these based upon the patterns that I use out here, and then to provide you with the narration of what those charts are telling us. So, Mike, I hope that helps you out. Thanks much for writing in. We get back from this breakout here. We'll go take a look at Nicholas's question, who wants to take a look at the SMH. He's saying it seems like the SMH is leading the markets higher. First it took them down, and now it seems to be leading them slowly back up. Would you please address this? Absolutely. We will do that for Nick when we get back from this break.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So we're going to go try to address the question here from Nicholas, which is, he says, it seems like the SMH is leading the markets. First it took them down. Now it seems to lead them slowly back up. So what we've got on our screen right now, top portion is the SMHs to represent the what he's asking about, the semiconductor index. And what I've got below that is the S&P 500. I probably should just change that to the SPYs out there. Now, there's green vertical lines. There's green and blue vertical lines. Let me get rid of that little white one so I don't confuse you out there. So the green vertical lines are lining up. Now, I'm looking at closing prices. So I'm just using a line chart out there. So it's looking at closing prices, both at top, well, at any point on this chart. So I'm lining up the highest closing high before prices move lower, and that's represented by the green lines out there. And so if we just simply start to the left out here, we start back, and it looks like the about the February 16, 2021 level. We can see that both indices top at the same time. If I come take a look at the next top out here, if I have any kind of significance, I mean, I just chose some data points out there. August 4th, there was a top inside the SMHs. But guess what? The SPYs continued to move higher. So the correlation doesn't always exist. I'm just looking at tops right now. If we take a look at the next top out here, this one coming on December the 27th, both indices tended to move lower from there. So that just takes care of a couple of tops. The blue lines represent bottoms. So if I come back here to the time period of October of 2020, you can see both of them, those blue diagonal lines, identifying the bottom. If I come over here to the next data point in October of 2021, both lined up at a bottom. If we take a look at out here on the trading period of January 27th, both identified a bottom. And of course, although I don't have it drawn in here, we've got bottom signals that tied out to each other on the 23rd. We've got some bottom signals that tied with each other on March the 1st. Now, so the SMHs, you're saying, is going to be what leads us higher. I don't know whether that's the case or not. But first, if we take a look at the SMH, I've got my trend lines on here for both instruments. Now, remember, I'm not using the candlesticks or bars. I'm using the line. The system isn't intelligent enough to know that that's actually what I'm doing. So these diagonal lines, these trend lines, are actually coming from the tops or bottoms of the candle sessions out here. But look, you can see right now the SMHs have run into descending trend line resistance out there. So if that's the case, then what this says, Nicholas, is maybe you need to be careful here, because prices run right up into resistance. Do things turn down from this level out there? So that's just something to consider. So we know we've got that trend line resistance. As I pulled over the SMH charts out here, what we're also going to see is there's a key level. If price is going to move higher in the SMHs, then what it really needs to do is close above 270.15. Now, 270.15 is the center of its bear structured daily profile. That's a real strong resistance level. But even if it can get above that, Nicholas, what it really needs to close above to suggest that it wants to move the markets higher is 273.50. You would need two consecutive closes above 273.50. That is the top of the bearish structure daily profile. And if we get that, then the SMHs are signaling that they will move back, or should move back, to their swing point from February 10th, or to their TD9 count breakdown level of 301.80. But to the extent that you want to use the correlation between the SMHs and the S&P, or any other index out here, then know that right now the SMHs are sitting at that significant resistance level, which is simply just a descending trend line. So hope that helps you out with your question. Thanks so much for taking the time to write in. Let's go out to Philly and speak with John. John, thanks for calling. Thanks for holding. How are you today?
Steve, I'm doing very well. Thanks for taking the call.
My pleasure.
Steve, I wanted to give you a short question. I'll have to take the answer offline if you could.
Sure.
But I was wondering your thoughts, please, on the broad averages, the S&Ps, the NASDAQ, the New York Stock Exchange. Steve, I can see the reasons why those indices would move higher, or at least hold up, on a combination of, say, European money coming to our shores, corporate treasury desks buying back their own stock, think Apple and Google, and some unwind of the short selling that took place into the January 24th and February 24th lows. I'm wondering, do you see the fundamental factors, or what might precipitate a imbalance, sellers taking control, driving things lower, aside from those positive items I just mentioned? and wondering if you could share any thoughts you have on that subject combined with what you see in the technical patterns. So that's what I wanted to call and ask your thoughts upon, and I'll take the conversation offline if you don't mind.
Absolutely, no problem at all. Hey, John, thanks for the call. Always good to hear from you. So let's go ahead and rip apart the indices out here to a certain extent. So let's do this. Let's start with our 4-panel daily time frame charts. I don't think we looked at these yet. So let's go take a look at these. So they got the ES, the NQ, the YM, and the Russell 2000. So in order for a market to signal to you and I that it wants to move higher, one of the first things that we did see it do here, especially on these charts, is for price to remain above those red oscillator and change line levels. So red line on the oscillator and change line tells us that our price oscillator, that's the difference between a 39 and 19 period exponential moving average, is below zero. When you're below zero, you're kind of in bearish type territory. However, when you're below zero and falling, then you're really in kind of bearish territory. Not kind of, you really are in bearish territory, directionally speaking. So when I use bull or bear here, it's really a directional move. But right now, price is above those red oscillator and change lines for the ES, the NQ, the YM, and the Russell 2000. So whereas John can envision the markets moving higher, this one element then supports that idea. Is there anything else for us to take a look at here? Just really with regard to what the price targets would be. So to the upside, in the ES mini, you'd be looking at 44.84 to 45.20. That's the top of the profile, and it's T89 breakdown level. In the NQ, it's the 14, really I'd say it's the 1477.66 area. And inside the Dow, it's 35.060 to the 35.330. And the Russell 2000, if it can clear these highs out here, these highs being about 2062, then you'd be looking for a move to the 2209 level. Okay, so that's factor number one. What's getting in the way of this potential move higher? Well, what's getting in the way of that is really that volatility index. We're in a volatile market. You don't need me to tell you that, but that's not really what I was referring to. What I was really referring to is the fact that spot volatility index is above its 50-day exponential moving average. And when it's above its 50-day exponential moving average, the direction, the typical direction for the market, unless we've really identified a solid bottom, is that the market could, at any rug pull, any kind of scare out there, you could see the ES mini drop quickly. Now, when I really didn't mean to grab that chart, I meant to grab this chart here, which shows you all the instances and the reasons why you and I pay attention to whether the spot volatility index is trading above or below the 50-day exponential moving average. It's because of these boxes and the tendency of what it typically means. So the thing that is getting in the way for the markets to move higher is that spot volatility index out there. Now, there is something that is taking place as we speak right now that gives you another bottom signal. And that's this with regard to the spot volatility index. So spot volatility index is a very cool tool. Gives us a number of different elements to be able to assist us with regard to what the market's intentions are. The bottom panel of this screen takes a look at the spread difference between the 3-month and the current month out here, the spot volatility index. And when that gets above 1, and then drops down back below it, that gives us a bottoming signal. Sometimes to the day, not always to the day. And right now, if we get that close, we're at 0.99, agent 99 out there. So you could get another signal that could be a bottom, John. So that's something to consider. Steve Rhodes with TFNN. We'll finish this off when we get back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Direction's daily S&P Biotech 3x bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So we're taking a look at the trying to answer John and Philly's question. Do the charts support the indices? That is, the equities. Do they support a move higher out here? So we've already identified that price is above the daily oscillator and change lines. We've identified that. What did we just identify? The spot volatility index is a potential problem, but that 1 year, the 1 month, the spot volatility index versus the 3 month counterpart out there is suggesting, okay, you do have something that signals it wants to make a bottom. The next place we go is take a look at the advanced decline oscillator reading. Is it above zero or below zero? If it's above zero, generally speaking, it is a bullish indicator. If it's below zero, it's a bearish indicator. Well, it happens to be above zero. So that's another thing to support that idea. Well, how about market breadth? Good question out here, John. So let's go take a look at the market breadth. When we take a look at our speed dials, this is for the S&P 500 specifically. If we take a look at the speed dials, weekly, daily, 240, and 60, they are all in bullish territory. Let's just take a look at the daily out here, and we'll just simply expand that. What I mean by that, folks, is that we have more instruments trading above the top of their profile, daily profile that is, which is 182, and there are only 90 trading below that. So this is a bullish setup up here. And so for all four time frames that you and I use to track this, they each are in the bullish zone. Now, we only have two instruments, or two of the indices that we track, the NDX and the S&P 500. And in the NASDAQ, it's the weekly that is the real booger out here. So the weekly has yet to give you that bullish crossover. Right now on a weekly basis, you have 11 instruments trading above the high and 30 trading below the low of those profiles out there. So that's a little bit of a stinker. So you don't have everything that's set. If we had this set to a speed dial that had a bullish outlook, then from a market breadth standpoint, then I'd say we have really compelling information that, yes, that the markets want to move higher. But you do have the beginnings, most certainly, of what that is suggesting to us. So what is the last element? Is there any other element that we can use here to assist us? I tell you what, these folks here, Season X, let me open this up. The folks at Season X have given me a permission to use their tools out here. This is I've done that seasonal study. You guys have seen it till you're blue in the face out there, but it's a great tool to help us what's going on. Here, these guys have it all developed, and this happens to be the SPY. So we're looking at the SPY right now, and the red vertical line shows you where we are at. Now, the cool thing, this has a couple of different things. One of the things that this has, it allows us to get rid of or keep in the COVID crash. So here, I'll hit that button right now. You can see this includes the COVID crash data, which is going to be a big influencing factor. This chart that we're looking at here from a seasonal standpoint is just a 5-year seasonal standpoint. So do we keep that in there or do we take that out? Well, you can do one or the other. I'm going to go ahead and take it out for us and say, okay, that didn't happen. Now, what this is showing us, John, interestingly enough, so different than the seasonal pattern, the 86-year seasonal pattern that we looked at for the Dow out here, this shows that a bottom could come in the middle of March. Now, the actual low out here looks like it's triggered around March 22nd, March 23rd, along those lines. I'm not saying that it's going to have to follow this pattern out here, but boy, it might be nice for the S&P or the markets to have at least one more push lower into March, scaring the you-know-what out of everybody. And then you and I and everybody else here at TFNN, we'd be looking for some type of bottom signal that might tie in to this March low that typically occurs over the last 5 years in the SPY. Now, we can change it from the last 5 years. We can go ahead and take a look at the last 10 years out here. Last 10 years, it starts to get back more towards the 86-year cycle that I take a look at inside of the Dow out here. But if I go to a 15-year period, this 15-year period here, John, takes out, it gets rid of, now I'll put it back in, it takes out that not the flash crash, but the COVID crash. This too says to look for a bottom. Now this is around March 7th. So here we've got March 7th. For the 5 year, I believe around March 20th. If we split them in half, we're right around the middle of March 15th out there. So from a seasonal perspective with regard to the SPYs, this might say, hey, that spot volatility index being above its 50-day exponential moving average, and that's the real weakness here in being able to suggest that the bottoms that are put in, that we can see across the board in all indices and many ETFs, that bottom is absolutely in out there. So so that spot volatility index is really the wild card out there. And we're in a period of war where a lot of news, facts, maybe false facts, whatever they might be, can certainly turn this market. So that's the best that I can do for you. The majority of indicators support what it is that you have just stated. And the seasonality doesn't really blow that apart or anything because we use that as kind of a guideline out there. But with that spot volatility index above the 50, that's where it says, you know what? Maybe we do get that pullback into March. Maybe it's between the 7th and the 23rd or whatever that date was there. We won't use those to be exact. What we'd really be looking for is some kind of bottoming pattern. So I know that was long and lengthy, but I think everybody really has that question out there with regard to what the equity markets are doing. Sometimes you just have to be patient and wait, and I think we are in one of those time periods. So I do hope that helps you out, and thanks so much for writing in. Alex writes in, and Alex says, hey, Steve, hey, Alex, ExxonMobil has not hit a new high in the recent run-up in oil prices. Is there a problem with ExxonMobil? I don't know. Let's go see what the charts say. Let's begin by putting up our 3-panel chart out here. And while that's up, if you give me just a moment so I can switch over to another set of charts. Well, you know what I'll do? Just since I have that up, those sets of intraday charts, I'll get over to those, and I'll get ExxonMobil started on that. So that's what we'll do. We'll see if this helps us at all. So with regard to ExxonMobil, let's just pull back the monthly time frame chart out here. So looks like the all-time, well, I don't know if that is or not. Let's just make sure. Yeah. So the all-time high inside of ExxonMobil, as Alex is pointing out, comes in July of 2014. That's when oil peaked, is my recollection, July of 2014. If we just take a look at retracements from the high out here down to the low, and that low came in when we had that negative $40 oil. From a retracement standpoint, this is a monthly basis here, Alex. You've got an A to B equals C to the upside. By the way, that B point in the monthly chart has volume of 416 million, and that was taken out with 607 million shares. So let me just draw the A to B, the confirmed A to B equals CD pattern that we have inside of ExxonMobil from the long-term time frame. And that's going to give us a 1-to-1 price projection of 86.91. But very much like the XOP, the retracement on the monthly time frame is a 0.382. It was really 36.84%. So, Alex, this really suggests that price should get back to those highs because this should do more than a 1-to-1 A to B equals CD to the upside. The 1-to-1 price projection, however, is 86.91, the 1.272, 96.38, the 1.618, 108.43. So that's the bigger picture with regard to ExxonMobil. With regard to the weekly time frame, it too has an A to B equals CD. It is confirmed, and it suggests a move up to 85.91. Now, what I don't know is where price will close tomorrow. But if price does close above 80.81, that's the top of its bearish structure profile, that would be a bullish outcome. So watch 80.81 on a weekly basis. If you see that, that says that, hey, no problem that we're seeing here in River City. If price is traded above the top of its daily profile, but we'll go see if there's any other signals out there that Alex and you and I need to be aware of. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So we were taking a look at ExxonMobil. XOM is a ticker symbol. We've established, confirmed A to B equals CD patterns, the upside on the weekly, on the monthly, on the daily out here. Now, what the daily chart also shows us, so they confirmed TD9 count and Rhodes Momentum Indicator top. And then price did what it was supposed to do, is really take yourself back to support. Now, the key support levels on this would have been 71.39. That's the breakout area. But above that is its bullish structured profile. That's exactly what took place a couple of days ago on February the 24th. As price was coming back, it was coming back and testing that bullish structured area, which is between 73.41 and 74.43. Now today, Alex, price is trading above its oscillator and change line. A close above 80.71 would be a close above a green oscillator and change line. It says we have a rising price oscillator above zero. That's just going to signal that price should go back and retest the high. So what it looks like to me is we've got confirmed A to B equals CD on the intermediate and long term. On the intraday time frame, which in this case here would be a daily chart, your topping signal, price pulls back and tests support, and now it's back on its merry ways to higher ground. So no, I do not see any kind of problem here inside of ExxonMobil. In fact, the charts are very orderly in communicating to you and I what it wants to do. So hope that helps you out. The last question is going to go to Jared, and Jared says, can we take a look at MO? MO is Altria Group out here. So let me get over to our black background charts. And let's finish the question here. I am long and looking to add to this. Is this a sign of strength out here? Well, boy, it's nice. I don't know whether. Let me see if I get to my other charts real quickly. I'm just looking to see if there's some kind of top out here. So everything looks good. You're above the daily, weekly, and monthly profiles, so that looks pretty good. Just want to see if there's any kind of a topping signal or where we're at inside this move out here. So price is moving higher, doing less relative energy, but that just needs a bearish reversal candle. Really, I'd say if you're going to add, you got to do it on some type of retracement. The weekly chart is very bullish when I take a look at this chart. I mean that because it's trading above TD9 count breakdown levels. The monthly chart above the profile. Everything looks very good here for Altria. So I would take a look at some type of retracement to add to your position. Folks, stay tuned. You've got your favorite polar bear up next, and then Tom O'Brien will take us on home. I'll be back with you tomorrow at 1 o'clock sharp. Have a terrific Thursday, folks.